Hi guys, welcome back to our channel. So today we'll be discussing about the difference between trading and investing. You must have heard about people making money from the stock market. Although there are a million ways to do so, we have two broad classifications of stock market activities, that is trading and investing. Traders who believe in trading charts and investors who believe in fundamental of valuation over a period of time. Before we get into the specifics of trading and investing, let's understand the difference by looking at the two most influential people in the world of wealth creation. One is known for his long-term investment and the other is a renowned trader. If you are a stock market follower, you might have already guessed the names. They are Warren Buffett and George Soros. Both have made huge piles of money in the stock market over the period of their lifetime, but differently. Trading and investing share the same goal, that is making money. But the differences set in when you draw your attention to the nature of the risk involved. Investing and trading are two very different methods of attempting to profit in the financial markets. Both investors and traders seek profits through market participation. In general, investors seek larger returns over an extended period through buying and holding. Traders, by contrast, take advantage of both rising and falling markets to exit positions over a shorter time frame, taking smaller, more frequent profits.
Trading is generally done by the people who do intraday trading and are always looking for growth investment, where technical analysis tools are used. They predict the higher or lower movement, while an investor, on the other hand, is looking for value investment, and they stick with their investment for a very long time. Risk is very high in trading strategy since there is no hedge against this type of transaction, so the money at stake is very high without downside protection. On the other hand, an investor might have a properly balanced portfolio where a downside of a particular asset will be the upside of others to hedge for the losses. The movement in the market and the indexes is generally due to large volumes of trading activity, so in this scenario, traders play a major role in moving the market prices compared to an investor. Returns are pretty uncertain and fast in trading since buying and selling transactions happen daily. An investor has to wait pretty long to get handsome return.
Trading, if we say, is more centered on making short-term profits. It doesn't care about long-term health of a company or what it does. It's instead more concerned about predicting the price in the short term for making profits. Traders spend the bulk of their time analyzing trends and observing patterns as they collect insights and use it to buy and sell stocks for short time periods. Traders also happen to have their own unique way of minimizing losses. For instance, they can adjust risk with tactics such as stop loss and or short selling, and when they have to buy again. Investing, on the other hand, is focused on a bigger picture. They have a buy and hold philosophy that they use to build their wealth in a gradual manner. So basically, what traders do is buy stocks that they believe may be undervalued, of stocks of companies that they believe hold solid financial fundamentals. They'll then hold on these stocks for years in the hopes that their value will grow and make them colossal amounts of profits in the long run. It's therefore safe to say that they have more concern about the long-term health of the companies they invest in.
When deciding between these stock market activities, you need to think about the time you can devote to any one of them. If you can spend hours reading charts and graphics daily, then trading would be beneficial for you. If not, then you would be better off with long-term investments. The amount of equity research is trading is also much more extensive than in making investments. A lot of hard work is involved in analyzing the financial statements, company growth, history, and also future financial projections. Those who would really enjoy putting in energy and doing the technical and fundamental analysis religiously should consider playing the market. Considering the size of an investor and their goals, you would be better suited for long-term investments to grow your portfolio if you are a small investor. In contrast, if you are a large investor with the goal of short-term trading, then you should plan to beat the market.
Suppose we have to now summarize the discussion on trading and investing. So in that case, traders are the ones who take advantage of the market conditions to enter or exit their positions on stock over a short period, taking smaller, much more returns. In contrast, investors strive a long returns over a longer drawn out period by buying and selling and holding stocks. It is not much a concern that you are trading or investing, and it's just that you need to be engaged in chase that suits your personality, traits, capabilities and philosophy.
Investing is a fairly easy game as compared to trading. Trading requires high market skills, real-time analysis and identifying the price movement in a fraction of a second to set your right foot forward. Retail investors who want to develop a passive income without devoting much time to the analysis should invest their money. There are higher chances of growing your capital as an investor. A person with proper knowledge and a great sense of market can try the luck in trading. Investing should be more like watching paint dry or watching the grass grow. If you want excitement, take $800 and go to Las Vegas, said Paul Samuelson. Making long-term investments require knowledge of companies' financial essentials like financial ratios, understanding free cash flows, DCF valuations, relative valuation multiples like PE ratio, PBV ratio. Although you have the opportunity to make piles of money quickly with trading, the risk involved is much higher in trading than in investments. You can lose more money than you have in trading. There is a risk of losing money in investments, but that occurs because of the vagaries in the business and market timing. Long-term investments are for those people who want to make money but avoid huge losses. You could earn a decent return by reinvesting your dividends and leaving your money in the market for the long term.
Please don't forget to like, share and subscribe to our channel, and also to hit the like button.
Also, please don't forget to check out our book that's exclusively available on Amazon.